This Week in Economics on the 13th of May 2018. From Numbers Man is part of our joint venture, I should say, with WBRN Radio and on the Bostonred Network with technical assistance from Cranston Analytics. This is our macroeconomics program, and we look at things from the macro point of view and how things have actually changed in the particular discipline to incorporate what once was thought of as some micro type of activity. But nonetheless, we'll stick to it. Governmental activity is a shortcut there. We've had some major economic news this week appear from the Bureau of Labor Statistics. Let me move here to it, and we'll talk about petroleum pricing later here, and also what we've updated is our commodities analysis and went to Bloomberg. It sort of got disrupted a bit when we were looking at the new format from the BBC, which it caused some problems in that they had omitted some major players that we once used, and by doing that were forced to move to a little different format. So now we move back to, in our opinion, a much more comprehensive format. This is the Consumer Price Index, a little bit out of order here, but nonetheless, it was on the 10th of May that it was sent out, and this is for April of 2018. This is of all urban consumers. A little bit different changes here. Increased 0.2% in April as a seasonally adjusted, on a seasonally adjusted basis, falling 0.1% in March. The U.S. Bureau of Labor Statistics reported today over the past 12 months, all items in the index increased 2.5%. That is over, actually, we'll adjust that in a minute. The index for gasoline and shelter were the largest factor in a seasonally adjusted increase, although the food index increased as well. The gasoline index at 3% or more than offset declines in other energy component index, led to a 1.4% rise in the energy index. Just adjusting my screen here a bit. Okay. Anyway, nonetheless, the food index rose at 0.3%, which food at home index, while the food at home index increased 3%, the index for food away from home increased 0.2%. The index for all items less food and energy increased 0.1% in April. The shelter index at 0.3%, with other indexes mixed. The index for household furnishing and operations, personal care, tobacco, medical care, and apparel all increased in April, while those for used cars, trucks, new vehicles, recreation, and airline fares all declined. The all items index rose 2.5% for the 12 months ending in April. This figure has been more trending upward since it was 1.6 tenths for the period ending in June of 2017. The index for all items from food and energy rose at 2.1% over 12 months. The food index increased 1.4%. The energy index 7.9%. So you see a market increase in these items, and that in itself is a very interesting situation here. And we're just looking at some of the categories here. If we look to October of 2017 at 0.1 for all items, and if we get to April, it would be 0.2 tenths. For the 12 months, 2.5. Let's see if I can delineate out some of this. New vehicles at a negative 0.2%. Now that would have been in 2017, and the current April at negative 1.6%. That's new cars. Used cars at a negative 0.9%. Apparel at 8 tenths. Medical care and commodities at 1.9%. And the shelter, very important part here, at 3.4%. That was the increase there. Transportation services at 4.1%. Medical care services at 2.2%. This is adjusted for the 12 months. So let me just get April singled out here. And medical care services at 0.2%. Transportation services a negative 0.4%. Shelter at 0.3%. Look a little bit more realistic here. I'd look at my columns. And services less energy services at 0.2%. So as we move down here, the food index rose 0.3% in April after 0.1% increase in March. The index for food at home rose 0.3%, and the largest increase since March of 2017. The fruits and vegetable index rose 1% in April after declining in February and March. The index for meat, poultry, food, eggs increased 0.7%, with the index for eggs at 0.7%. 7.1%, and the percentage of the beef index rising at 1.8%. The index for dairy and related products also increased in April, rising at 0.4%. In contrast, the index for non-alcoholic beverages fell 0.6% in April after rising in March. The index for bakery products, cereals and bakery products, fell 0.2% in April, and the index for other foods at home was unchanged. The index for foods away from home rose 0.2% in April, following a 1/10% increase in March. Over the past 12 months, the index for food away from home increased 2.5%. The index for food at home increased 0.5%. The index for meat, poultry, fish, and eggs increased 3.5% over the last year. The only one of these 6 major grocery store food groups increased indexes to increase. The indexes for cereal and bakery products and for other foods at home were unchanged. The remaining index declined modestly over the past 12 months. Now, energy costs, separating it out, rose 1.4% in April, following a 2.8% increase in March. The gasoline index rose 3%, following a 4.9% decline in March. Before the adjustment, gasoline prices increased 6.2% in April, and is in contrast to the electricity index fell 0.6% in April, and the index for natural gas, we don't hear much about that anymore, fell 0.4%. The energy index increased 7.9% over the past year, while all other major component indexes rising. The gasoline index increased 13.4%, and the fuel oil index rose at 22.6%. The remaining components of the index increase were moderate. The electricity index rose 1.2%, and the index for natural gas advanced 1%. All items less food and energy. The index for all items less food and energy increased 1/10% in April. The Scheller index at 0.3%, with the rest of the index at 0.4%. The index for lodging away from home increased 0.7% in April. The index for household furnishings and operations rose 0.5% in April, and the largest increase since April of 2015. The personal care index increased 0.7%. The apparel index rose 0.8% in April after declining in March, and the tobacco index increased at 1.3%. The medical index rose at 0.1% in April, with hospital services index rising 0.2%. Prescription drug index at 1.10%, and physician services index unchanged. The index for education and for alcoholic beverages also rose in April. I think we put those out there. Index for used cars and trucks fell 1.6 in April, the largest decline since March of 2008. The automotive sector has been suffering for a number of months here. The recreation index fell 0.4% in April, and the new vehicle index declined 0.5%. The index for motor vehicles insurance fell 0.2%, and the fifth month decline since April of 2017. The index for communications also declined at 0.2% in April. The index for all other less food rose at 2.1 over the past 12 months, the same increase as for the period ending in March. The shelter index rose 3.4% over the past 12 months. Medical care index at 2.2%. That declined over the past 12 months, including those for new vehicles, airline fares, used cars, trucks, and communications. Yeah, let me be getting to the end of this. The consumer price index for all urban citizens, consumers at 2.5% over the past 12 months, as index levels of 2.546 here. And for the month, the index increased to 0.4% prior to a seasonal adjustment. The consumer price index for urban wage earners and clerical workers increased 2.6% over the past 12 months. For the month, the index increased 0.5% prior to an adjustment there, and the chain consumer index for all urban consumers increased 2.3% over the past 12 months, and there the index increased at 0.4 on a not a seasonally adjusted basis. The consumer price index for May is scheduled to be released on Tuesday, June the 12th. So that is the consumer price index here. And let me just make sure that, okay, I think we covered all items here. We don't want something to pop up that has, as they say, not popped up. Let me get to Bitcom here. There has been much in the news last week after the Berkshire Hathaway conference out in Omaha, Nebraska on Bitcom. It slipped below $9,000 after Korean exchange raid. This is from Bloomberg Cryptocurrencies here. They are beginning to take more hold across many sectors. Was on course to eke out 2 weeks in a row above $9,000. Two digital tokens broke its streak on Friday after prosecutors, that's in South Korea, one of the world's largest cryptocurrency exchanges, renewing concerns that heightened regulatory scrutiny around the world could hurt business and dampen enthusiasm for digital assets. There's also been speculation that trustees of a failed exchange were selling its Bitcom to pay back creditors. The digital tokens declined for 6.4 and as low as $8,508 in New York trading. So this is getting to be much more of a big situation. Dip is part of a broad Bitcoin broader sell-off in digital currency market, which is worth $380 billion. That's according to CoinMarketCap.com. We'll have to investigate them. But most is $100 billion less than it was worth a week ago. The Bloomberg Luxury Crypto Index which measures the performance of the largest digital tokens, fell at 14%. The market decline, of course, is on the eve of Blockchain Week in New York, where thousands of boosters of crypto assets will gather for 24 events and conferences. So we didn't know about that one, and let's see. I guess we'll go to this. Is more on. We look at it in our open source report, but anyway, this is date the 11th. This is in technology, where it obviously should be crypto round 2 of the time for blockchain conference here. Whoops. Last week, and this is Nouriel Rubini tested his argument against Krypton conference. Let me start over again. Cryptocurrencies at the Melken conference, only to ignite a verbal brawl on stage on Wednesday night in Brooklyn. The whole audience was hostile. So I guess we've reached our free articles here. We have to change some things around. But anyway, let me just see if we can listen to this. Evidently, we are not going to be able to listen to his argument here. He is the economist, Rubini, that predicted the depression of 2008. And I'm not certain that we'll be able... no. We're not, so we'll just move right on here. But many are exploring it, and while we're on cryptocurrencies, many are exploring it. And Howie to offer BTC.com, a Bitcoin wallet in its app store. One of the things coming, this is user of Howie Technologies mobile phones will be able to download a Bitcoin wallet. You can get these wallets around various places. They are secured. The world's third largest headset maker is releasing BTC.com Bitcoin wallet in their app galleries, according to an email statement by the company. Would be the first crypto app offered by Shishing-based Howie. The app will be pre-installed on all new Howie and Honor phones. So, in other words, you'll be able to deal in Bitcoin if you wish. BTC, which controls .com, the largest Bitcoin mining pool, is owned by mining hardware manufacturer Bitman Technology. Howie is considered developing a mobile phone targeting blockchain-based application that was reported there. Now, there have been some loans also offered in that genre. And we've seen further of that. One loan company reported, I believe, on the Bostonred part of our network of actually securing loans. This was part of it, part of their portfolio. These are smaller loans, around $50,000 to businesses using as a collateral part of their particular setup. Let me just move here to Reuters. We just have to bring that one up. we'll come back to Bloomberg when we do our commodities here. But basically, I want to go to Reuters. There was a story here we were covering. Well, actually, there are two stories. One with Brexit, and with Brexit, we will go ahead and cover this one. This is a British story. The supply chain situation here. What will happen as Brexit unwinds? The challenge for aviation component firm. This is Mandy Rydyard. She had heard a French company a small stock where she where she a shock where she heard a French company bluntly ruling out a British supply chain from an international bid contract in China. And there's too much uncertainty, and we've talked about the uncertainty surrounding Brexit, to include British companies in a group representing the firm here. And this was from Britain and from France. The elephant in the room was Brexit. This is Rydyard said the meeting, which was organized by the British embassy in France, to spur more bilateral business, but only served to increase her anxiety about this is departure from the EU, and it's going to cause a lot of problems for the British economy. Has slowed sharply since the Brexit vote that was in 2016, and her firm Produce Max is riding out the storm. She's in the British city of Leeds, the company which her husband bought. She and her husband bought in 1997. Employs 71 people. Will soon open a second site, but the problem is, however, new work recently has been in a one-off-year job that other suppliers could not fulfill. Now, this has caused problems for a small firm of this nature, and because of the way Brexit is going here now, there's several theories on this, and this is something we brought in here. The best way to limit the impact of Brexit would be to keep the world's sixth biggest economy in a custom union. They've talked about this. The Tory government is not in favor of it. The trade minister there, Fox, a Leave supporter, said staying in a custom union would be a complete sellout of the voters. May has proposed that Britain could collect duties on non-EU imports on behalf of the bloc, an idea dismissed as crazy by our own Foreign Minister Boris Johnson. He pops up in this also. So there's really, it's very, very unclear. The House of Lords, I believe, in Britain had voted down the Brexit part. So this whole Brexit situation is still up in the air, and we don't know how it will settle. In the EU, they've dismissed both of these as unworkable. So in other words, a very long way to go, but what we see starting to emerge here with these very small firms are going to have a very, very hard time. Supporters of Brexit have long argued the decline in the share of British exports going to the EU, down from 54% that's in 2000 to 43% in 2016, shows why it's prioritized deals with China or the U.S. Now, with the U.S., with the new tariffs out there, we'll see where that goes. But with China, they can't count on China. So that in itself poses some problems for quote-unquote the sixth largest economy, and that in itself is a very tenuous classification. Rudyard said the fall in the pound value has helped the firm there. Sales abroad, raising extra cash from investments and increased automation. And so again, her firm is small, is automated, and basically the type of firm she has is a number of these type of enterprises in the U.S., and they are caught in a little different situation because they buy pre-processed steel. Now, she's in aviation where her contracts can run for 10 years, and thinking of getting into oil and gas work tend to be short-term, and the sector outlook is less buoyant, no doubt about that. And Boeing also mixes in this. So basically what is happening here, the whole trade, global trade with Brexit and with the tariffs in the U.S. is in itself in somewhat of an uproar. And this is part of the problem here. We can go to ZTE, and has paid over $2.3 billion to U.S. exporters in the last year. So in other words, some of these things are cutting both ways, and we'd be negligent not to mention healthcare, but G.J. Trump gave a major quote-unquote speech on healthcare, but it was basically cosmetic. They hired drug prices, but avoided taking any type of action really to cut them down. Johnson and Johnson, Pfizer rose 1%, while Merck in company jumped to 2.8% after the speech of foreign governments extort unreasonably low prices from American drug companies. So it claimed the S&P healthcare index ended 1.47% higher, while the Nasdaq biotech index rallied at 2.68. Tech sector slipped 0.32, with Apple dropping 0.38% after a 9-day winning streak. iPhone maker edged closer to $1 trillion market capitalization. Now, that will be overshot by Amazon. Now, weighing on tech sector, NVIDIA has been in the news before. They fell 2.1% on worries that a short-term surge in demand for graphic chips from cryptocurrency miners will be undermining the company's core business with computer gamers. Now, that is one of the interesting situations here, and we'll talk about this on our open source report. It's sort of, we see some overlapping going on here, but basically speaking, NVIDIA has, they are chip makers, and they make chips for gamers and chips for crypto miners, and they both need speed components. So this is where it's sort of interesting as a little situation here. Going forward, we were also reading an article today on the while we're here on the tax bill, as it affects, of course, corporate people. They've started to look at the effective tax rate from what was it, in the 30% down to roughly 21%. And these corporations have been basically buying back stocks. They've not been investing it in R&D or anything of that nature. But for other enterprises, it's a totally different ballgame. Many of the small businesses, and get into a lot of this here, but the S-Corp, they're using S-Corp as what they call pass-throughs, where it actually passes back to the business owner on individual return. Well, the difference here is individual taxes can still be in the mid-30s, whereas if you are a C corporate, or just a regular corporation, when we used to do more in the tax accountancy business at Cranston, we used to advise people, and this was over 20 years ago, to simply incorporate, because it gave, particularly in the tech sector, better liability. But nonetheless, now it's better taxation at the 21% rate. So a lot of S corps will be moving to C corps. So accountants are very, very busy trying to figure out where the law is, and such things as, say, moving expenses are now placed on the person being moved by the company. So in other words, there are a lot of changes in the tax law, and it'll take this article 18 months or so to sort this out. And it's one of the things we've looked at, the full impact of this tax bill really had not be seen because of particularly where small and medium business enterprises are in this whole game, and this is part of a bigger section here. And this is one of the things back to consumers and where they are in terms of increases in petroleum. We'll get to that in a minute, but what we want to do here is I think it's Gas Buddy is one of these. Here we go. And we'll see where it is in Boston, and probably around $3.09 a gallon at Mobile Shell 309 there, and let's see. Let's try in LA. Well, a little higher on the West Coast, anywhere from 314 to so-called regular, which cars don't use it, about 334. And this is some of the cheaper product here. And we'll see Sam's Club. I guess we'll do this. Well, anywhere from 322 to 352, 355 at Chevron, Costco. This would be in Sacramento, Northern California. Armco, we'll say around 340 or so there. And let me see if we can find something in more in Southern California. And here we go, into Los Angeles, where we're going to go in the first place. Yeah, we have a Sinclair there. We'll do a Shell. Yeah, about 355, mid-grade, premium 365. You can, at a 76, a lot of those stations on the West Coast, at 379 at Shell, 56. These are stations nearby. So basically around, we'll say about 350. Very few vehicles or cars do regularly anymore. So you can see where gas prices are going up there, and I just thought we'd bring that up. Anyway, let's do the commodities now. We'll go to Bloomberg. And then again, oil prices hit their highs. This is from Reuters. And let's see, on Thursday at 77.8 per barrel. This is Brent crude. And West Texas Intermediate at $71.75. And it's up to the mark that hit in 2014. China is the single biggest buyer of oil in Shanghai. Crude futures posted their biggest intradaily rally there at $73.70 a barrel. Europe and China will not fight against the U.S. sanctions. They will gradually accept anyway. Be interesting here with the sanctions, and we're talking about in Iran. Goldman Sachs has said renewed sanctions and risk to suppliers elsewhere, especially in Venezuela, mean a higher possibility of higher prices than the bank's summer Brent crude price forecast of $82.50. It'll be higher than $82.50. The threat of new sanctions come amidst the oil market is already tightening due to strong demand, especially in Asia. U.S. crude oil inventories fell at 2.2 million barrels in the week of April 4th, and that's the Energy Information Administration, slightly above the 420 million barrel 5-year average. They were at 433.76 there, and kind of interesting weekly crude oil production here. That's record last week, climbing to 10.7 million barrels per day. Now, that is up 27% since 2016. Means U.S. output is creeping closer to that of the top producer, which the Russian Federation, at 11 million barrels per day. So, so what we're seeing is energy pricing going up. We'll have to start looking at how that will affect consumer discretionary spending. We don't have it at the present time, but we'll see how it will go in those terms. We're just looking at the Energy Information Agency coal-fired generated capacity in and around the Mideast. This is in May. Coal-fired capacity additions from the number of companies in and around the Mideast added 41 gigawatts of new electricity generating power, and this is not a good situation. Coal capacity in the region is typically less than half of that in other regions, no doubt about it. Egypt, Oman, Iran, Jordan, and the United UAE have no current coal-fired electrical generation, which is good. The UAE has new coal-fired capacity will come online there. So some of the things, Iran's has a power plant in a partnership with someone else. With Chinese Shaanxi Electric will provide some megawatts of electricity. Anyway, we thought we would look at this, and well, we can get it from them. Anyway, crude oil prices. This is various ones. The Texas one at 71.36, Brent crude at $77.59. Louisiana Light, we don't usually hear that one, at $75.01. It is up also. And New York Harbor, this is gasoline at 2.19, Gulf Coast at 2.18, in Los Angeles at 2.37, and heating oil at 2.20. We talked a little about that. We don't usually get where heating oil is, but again, we looked at the average gas price at $2.86. That's in the U.S., and diesel at $3.11. Kind of unbelievable there, but yeah, $3.11. So a little bit higher on diesel, and this is retail pricing there for gas. This is wholesale petroleum pricing. Incidentally, this was closing on the 10th of May 2018. The same for gasoline pricing there. This was the average pricing. Now a little bit above that on the West Coast. And we look at some more for delivery today. This is maybe wholesale pricing, no doubt. What it is in New England at $2.30, in New York City at $2.55, in the Midwest at $2.43, in Louisiana at $2.78, $2.69 in Houston, in it's the spot pricing, okay. In Southern California at 1.81. Actually was down in Northern California at 2.75. So you can just difference a little higher. And then Northwest at Pacific Northwest at 1.7. Anyway, let me get to the Bloomberg numbers here to finish this up. Here we go. Let me skip around a little bit here. We'll start in Europe as we usually do. This is the FTSE 100 at 23.58. The DAC at a negative 21.36. And in France at a negative 4.001, and in Spain the IBEC at 24.80. So we're pretty much covered. That's the European. This is from Bloomberg, incidentally. In the Asian Pacific, the Nikkei at let's see, 261.30. The Hang Seng at 312.84. And we won't give some of the other Asian Shang Seng at negative 20.22. A little different here in their makeup in Bloomberg. Let's get to, I guess next the Dow Jones was at 91.64, and the Nasdaq was negative 2.009. And on to commodities somewhere here. No. We will get commodities. Actually, what here we go. The Bloomberg Commodity Index at negative 1.05. Several of these indexes here. I guess we'll just deal with that one. Anyway, nonetheless, crude oil here, Brent crude. Let's do Brent crude first at $77.12. And West Texas Intermediate at $70.70. It would be the same here. Gold. We don't have the Forex here, but was down $1.60 at $1,320.70. The gold on that spot down $2.30 at $19.30. Silver at $16.75. We even have copper here. We usually give copper, but anyway, it was up 15 cents. And platinum on the spot was down $3.35 at $922.87. I guess if you want to look at it that way. Precious metals, agricultural. Corn being down, almost like the farm report, $5.50. And wheat down $7.25. Cocoa, we used to get it was up $43. And live cattle, we don't have pork bellies, I guess, but anyway, it was up 13 cents. No pork bellies. I don't know what happened this 2 days. Anyway, no pork bellies here, but the commodities index was down. This is Bloomberg Commodities Index, and we finally bring that one back again. I'm not sure the agricultural situation here. We get the cotton, soybeans up 18 cents. Granola, where are they? We're down 0.90. Anyway, that was them. And so actually we found coffee here was down 15 cents. And well, we already did cocoa, so we can forget about cocoa. Let's see who else is here. Cotton, wool. We don't usually do wool. Anyway. Even rubber. Well, livestock, feeder cattle. I guess pigs down 2.22. I guess that's pork bellies. That's probably as close as we're going to get to it. Anyway, this will do it for this week in economics on the 13th of May, 2018 from WBRN Radio and on the Bostonred Network. Hopefully it was a bit enlightening here. The tax, I guess the recap pointers, the tax regime, tax cut regime is still in the air for small and medium business enterprises, and it probably will not be worked out till 2019, or depending, obviously you have an option of when you file your returns, but for businesses and corporations, S corps and C corps, been when they been their fiscal year. So let's say, for instance, if you're going like the Fed's July to July or March to March, however you want to do it. You don't have to go January to December. Anyway, nonetheless, we'll start to see some of these reports. The publicly traded corporations have already reported, but in essence, you won't get probably the true impact until their next reporting date or whenever that is. And it takes basically about a year for all this to filter through. So we're looking really at 2019. As far as energy prices, you have different variables here. You have the tariff regime that was put in effect, and some of it has been postponed, at least temporarily, I would say, by the DJ Trump administration. And also you have the nuclear accord that affects Iran and their presence on the crude oil market. Now, if they're, depending on what the European nations do, if they're trading with Iran, and if they disappear from that scenario, then of course that will raise prices, at least for the summer driving season. And also, in what will happen with Venezuela? Will they further sanctions there, and some of the machinations involving some of the Venezuelan oil companies? So those are some of the things going on here. We haven't factored in where Nigeria and those people stand in Brent crude, where Brent crude will go. There's been some artificial tightening on behalf of OPEC. So what you can see in the short term, depending also, that those left standing, quote unquote, in OPEC and out of OPEC, including the Russian Federation, will profit from this, where consumers will stand in the U.S. Consumer spending the last reporting month of March and of April, there is some softness in consumers, and looking at our purchase manager indexes, with many of those from the market people, some of them were soft, and we'll see where that goes. And also we'll look at our emerging nations such as Ghana, Kenya, etc. We're in pretty good shape, but on interest rates, etc. We didn't talk about interest rates this time around. The Fed, where the Fed will go, well, will depend. Obviously, energy sector volatility does factor into many products, and this tariff regime will also, in other words, they will cost more money, so that will trigger some inflation. Far as where wages are, well, at basically about 2.5%, and it kind of stagnated there. We didn't mention the unemployment rate was 3.9 now, 3.11, 3.9. Anyway, nonetheless, it is more or less standard. In other words, you're at roughly at 4%, 4.1, and it was there, and this really hasn't made much of a difference in that people have withdrawn from the market in terms of participation rate, but we expected that in terms of demographics and baby boomers' retirement. So there's a mixture of things here. We'll see you next week. For those in business, make the week a productive one. For the consumer, I guess you keep your eyes on the gas gauge. Good day.